Hi everybody, my name is Rekha Singh and welcome to the very first edition of Accounting Matters. In this video, I will cover the accounting equation, what it means and how it works by running through a few examples. So what is the accounting equation? It is a basic accounting principle and a fundamental element of the balance sheet. The equation is the foundation of the double entry accounting system. So are you ready? Great, let's get started.
Coming up on the screen is the accounting equation. Assets is equal to owner's equity plus liabilities. It is vital that the equation always balances. Let me demonstrate the concept behind the accounting equation by using an example. You decide to start a business retailing cell phones and lend your business 30,000 Rand. As you can see, the left side of the equation consists of assets. What is an asset? Assets are things the business owns. The right side consists of owner's equity and liabilities. These terms describe what the business owes. Owner's equity describes what the business owes to its owner. And in this example, it would be you, as you lent the business the money. Liabilities, on the other hand, are monies a business owes others. So the 30,000 that your business has is called an asset, and the 30,000 it owes you is called owner's equity. See, the equation balances as assets equals owner's equity plus liabilities. Assets include items like bank, accounts receivable, inventory, land and buildings, vehicles, and equipment. Equity is made up of capital, which is a contribution by the owner, and retained income, which can be described as profits held for future use. And finally, liabilities are made up of accounts payable, loans, and accrued expenses.
So now that you have a basic understanding of the accounting equation, let's work through a few examples.
Let's say that the business purchased inventory for 25,000 Rand. So bank has decreased by 25,000 Rand and inventory has increased by the same amount. The categories have changed, but the assets remain unchanged. The equation is in balance as assets equals owner's equity plus liabilities. The accounting equation highlights the structure of the balance sheet, which is made up of assets, liabilities, and equity. A balance sheet tells you what a business is worth at a given point in time. Now the business needs a computer but does not have sufficient funds, so it borrows 2,000 Rand from a third party. Bank increases by 2,000 Rand and loans increases by 2,000 Rand. The equation is still in balance as assets equals owner's equity plus liabilities. Now the business buys the computer for 2,000 Rand. Bank reduces by 2,000 Rand while equipment increases by the same amount. The equation is in balance as assets equals owner's equity plus liabilities. The business makes its first sale of 35,000 Rand at a markup of 40%. The sale has resulted in an increase of 35,000 in bank and a decrease of 25,000 in inventory. The profit of 10,000, which is your 35,000 less your 25,000, is reflected as an increase in retained income. Remember, residing in owner's equity is retained income, which reflects future profits. So retained income has increased by 10,000 Rand. The equation is in balance as assets equals owner's equity plus liabilities. And now that we have completed a few examples, here are some tips that will assist you when you are doing the accounting equation. Firstly, identify the relevant accounts in the transaction. Then, classify the relevant account. Are you dealing with owner's equity, assets, liabilities, income or expenses. And lastly, ask yourself whether the account is increasing or decreasing. And to illustrate the steps, let us use the first example where you contributed capital to the business. Firstly, identify the relevant accounts in the transaction. Bank, money is being deposited into the bank account, and capital, the owner is contributing money. And then classify the relevant account. Are you dealing with owner's equity, assets, liabilities, income or expenses? Bank is an asset, capital is owner's equity. And lastly, ask yourself whether the account is increasing or decreasing. Bank, which is an asset, is increasing while capital and thus owner's equity is increasing. You now just need to plug in the figures into the equation. It is that simple.
To recap, the accounting equation is assets equals owner's equity plus liabilities. The equation must balance always, always, always. The accounting equation is a snapshot of the balance sheet where the total of all a company's assets must equal to the total of owner's equity plus liabilities. Thank you for watching. Until next time, do what matters, accounting.